sell everything? I'm your host, Steve Van Metre, and thanks for joining me today. Get ready for the rage of the machines, but is Goldman referring to a melt up or a meltdown? Let's head over to the Tactical Flow of Funds report from Goldman, who says we're starting November 1st with the largest sellers completed. And get this, $20 billion worth of daily equity demand on the week. Assuming a flat tape means stocks go sideways, $12 billion from systematic and $5 billion from corporates and $3 billion from retail. And this should cause a melt up. Here's the case. A little picture. The two largest sellers of the marketplace are completed by Monday, Halloween. Month end, mutual funds and pension funds, the last of the sellers. And from there, Goldman says, we don't know who's left to sell. The big picture they claim is the biggest buyers, U.S. corporates and systematic trend return from their blackout window and through the trigger levels into the Fed meeting on 11/2 press conference and potential dovish market read. And what's this dovish market read they're referring to? Well, it's largely baked into the cake that the Fed is going to put out a large hike, possibly 75 basis points, but could start backing off on December's, and that would be really bullish for stocks. Let's take a look at pension funds because Goldman notes that their month-end equity supply gets cleaned up on Halloween. Their team estimates $20 billion for sale just on that day alone, so hold back on your buy signals until perhaps late on Monday. More of the same, they say U.S. pension funds are funded and now degliding orderly. Their estimates only $13 billion to sell for the entire month of October. How about corporates? They note the largest single buyer of the marketplace returns back following the earnings blackout window after 46% of the market cap of the S&P reported this week. That means the buyback machine turns on Monday ahead of any tax changes. Now keep in mind, if you're wondering what these tax changes are, it doesn't affect you or I, but in terms of buyback starting next year, companies have to pay a 1% tax on that. So look for them to overfund going into the year end and then potentially backing off starting next year. How about this? On Halloween, Goldman Sachs officials start to the buyback window. They know 65% of corporates are in the open window. $1.1 trillion worth of executions for this year. Not the end of the year, but the total year. Largest execution on record by 10%. And with that, 42.5 trading days in November and December, including major vacation weeks and low liquidity. In fourth quarter, Goldman buyback desk estimates a whopping $270 billion in repurchases, broken down by $80 billion in October during the window and $190 billion in November and December, creating a big bullish case. And they note that the $190 billion of repurchases in the last 2 months of the year is $4.5 billion a day and front-loaded into November, which could be greater than $5 billion. So you see, there is a strong bullish case just from buybacks alone and the sellers to stop. But what about these quantitative, these systematic machines? Well, guess what? They're looking to buy too. Here we can see systematic trend strategies and volatility compression. Flat tape means stocks go sideways, a whopping $61.6 billion worth of global equities to buy just over the next week. Up modest meaning the market trends higher, $77.7 billion of global equities to buy over the week. If the market moves up big, now you're talking $90 billion of buying for the week. If the market goes down a bit, they're still buying at $36 billion. Market tanks, they're even buying $17 billion. Buyers across the board. How about Nomura? We look at theirs quantitative machines, and what do we know? That they're not far off from their triggers too. They're sitting at max short. They're looking to buy. How about TD Securities? Well, guess what? They too are sitting at pretty heavy short positions and just below their buy signals too, setting up what could be a melt up. Let's take a look at what's going on here. And what do we see? The S&P 500 momentum turning positive. RSI is 59. MACD, it's got a positive cross. Everything's looking good. 9 consecutive day of buy signals. Still holding a position here because what am I going to wait for? Perhaps I'm going to wait till late Monday before I would put that on the board and to the subscribers. But note, I want to watch that this 3-month window flips from a sell minimum to a buy minimum. I have a hunch that's coming really soon. That would mean we're in a nice bottoming pattern. Let's take a look at the charts here and see what they tell us. And it looks like a bottom here is indeed starting to form. Here we are on the SPY. You'll note that a bottom here, we have a kind of a multi-stage bottom. You have a bottom, it's reconfirming, holding that. It ran up into the supply zone. I could see, maybe a push back down in here to 380. I mean, that wouldn't be a big move down after Friday's big move higher into the sell zone. And then after that, I'm looking for a break into this zone to take this higher. How high can we go from here? Well, it's got some room to run. I think it could easily get up here to 416 and maybe push beyond that. A break of the 200-day moving average would be seen as very bullish, and that would be a nice move. Let's take a look at the QQQs, the tech stocks here, and what do we see here? Momentum also positive. RSI is over 40. It's at 53. Got a positive cross on the MACD. 9 consecutive days of buy signals. Again, looking for this sell minimum here to flip to a buy minimum. And that should be coming pretty quick here. Upside target at 291.50. Downside 272, 273. Let's take a look at QQQ and see what we've got. And what do we see? The upside target right into this sell zone. The downside is right back where it opened on Friday. I don't think that's likely the case, but I do expect perhaps a little bit of selling before all of this buying hits the tape starting on Tuesday. And that will, of course, Wednesday's the Fed meeting, the press conference. So look for that to be a catalyst as well. And you can see breakout. You've got the 2-year volume profile sitting up here at 314. You get over the 200-day moving average, and you've got a case that you could get up here to 340. Don't know if we'll get to all-time highs again, but there certainly is a case that we could see this market moving quicker. But what about the bond market? Are they excluded from this rally? Well, no, they're not. In fact, the machines are looking to buy bonds as well, meaning we could see a melt up kind of across the board. Let's head back over to Goldman, who notes that in a flat tape, $14 billion worth of global bond futures. Again, bonds just go sideways. They're buying over the next month. Up big, you're talking $142 billion or about $35 billion a week of buying over October or over November. That could be huge. Even in a down tape, they're buying, telling you that they're looking to get back in this market. How about Nomura? They're looking to trigger off their short position to start buying, as is TD Securities. Now, some of you note that I mentioned a couple weeks ago, I'm working on a mimic report of these so we can get a better picture of these, and it is really cool. It looks awesome. I don't have anything to show you yet because I'm even running the screen across ETFs to show you how these machines would trade ETFs. And then once I'm done with that, I'll send it over to the programmer so they can code it out. But it is pretty awesome. Let's take a look at the bond situation here. We note that momentum has turned positive on TLT. RSI is at 40. That's a critical number. MACD's got a positive cross. 1 consecutive day of buy signal. Not much to get excited about. Still too early to take a trade on this, but something definitely to watch as we dig through November, particularly if there is a sign of a Fed potential pause on the board, then that would be bullish. But hang tight on that. Put that one not too far off your back burner, but put it out there somewhere where you're watching it because you want to see this thing get over the 21-day moving average. And really want to see TLT kind of get over 103. That's kind of the last of the recent selling. And then we want to look for a break of 108. So there's some moves here that you want to see. You want to see it get over the 50-day moving average. And then you start to make the bullish case for the bond market. All right, let's take a look at the commodity market because what do we see? Potential short covering in gold coming soon. Now, subscribers to Markets Insider Pro got a tip on that last week of what I think is coming. But let's take a look at gold. Momentum is positive. RSI over 40. Positive cross on the MACD. Momentum timer Pro on board with that. 2 consecutive. Oh, it's not. I'm sorry. 2 consecutive days should be buy signals. Forgot to change that. No position, but again, I'd be watching this one. Again, it looks like we're about to see a melt up across the board. That's what really gets interesting to me is we see just kind of broad-based buying from these machines as all the selling ends. Gold, it's got a little downward. It could retest this 151. I'm looking for a little upside here. Move at some point. I want to see this 50-day moving average start to calm down and flatten out. It hasn't done it yet, but the 21-day is leading that. Let's zoom out a little bit here. And what we could see is that could put us right back up into this 166 level. A nice trade there. Let's look at gold futures. Looks like it's about to break down, but you got a nice little double bottom. Again, could it come up and easily run into this 100-day moving average at around 1730? Absolutely. Again, I know the machines start to cover some of their shorts, but they don't turn into aggressive buyers. So don't look for a huge move here, but look for a move there nonetheless. How about we talk about currencies? We note that everyone thinks the dollar is done now. It's peaked. Not a lot of movement from the machine's perspective, but how about we take a look at UUP? Momentum turned negative. The RSI is the only positive show here at 46. MACD's negative. Momentum Timer Pro's got 5 consecutive days of sell signals. Now, some people may have been stopped out of this, depending on if you moved your stop losses up. I still like the dollar. And let me show you why here, because it doesn't pretend that this is over. It tends to follow the 50-day moving average. Break below and then rally back, break below and rally back. And then when things get real tough, it comes down to a 100-day moving average. But the key with the dollar is from a macro perspective, the dollar shortage isn't over. And that's what got it for me. If you were in this trade, or if you got stopped out or looking to take a small re-entry point, you should be picking one up here pretty quickly because the setup looks nice. Let's go look at the broad dollar DXY. And what we can note is when it gets up into these points, you could easily get a pullback here around 108 or the 21-week moving average. You could get a pullback from there, and there's still plenty of support, going back through history. So not a big risk on the dollar here. Again, the macro perspective is bullish for the dollar, and that's still why I like it. If you're looking for that trade, maybe that won't be the biggest opportunity here. I think you've got a bigger opportunity in the broad equity market. You've got some bonds looking to be massively oversold. The machines start triggering. Gold is interesting, but there's some other ways I'd play that. Again, got that for the subscribers that we'll talk about. And so with that, I'm Steve Van Meter. Thanks for watching. Thanks for being fans. Bye now.